Gentlemen, how you guys doing? Good morning. Yeah, good. Early morning. There's no better way to start the morning than being right here with this esteemed panel and learning about something quite interesting in our space. Very esteemed. So before I start off, I want to let you know, first of all, my name is Abdullah Snowbar. I'm the executive director for the DMZ at Ryerson University. The DMZ is a business incubator helping tech startups right here in downtown Toronto in the same way that Goodmans is helping out tech startups right here in downtown Toronto. We've been around for 7 years. We're actually celebrating our birthday on Thursday. So it's going to be our 7th birthday. Maybe a little clap for that. And we've been, so 7 years, we've been able to help more than 280 companies. The startups have been able to raise more than $300 million, and they've created more than 2,800 jobs. All that to say that we don't do this alone, of course, and part of the support that we build out comes from the people that we bring in terms of partnerships. And one of the very strong partners that we actually have with us at the DMZ is Goodmans, and in particular Allan, actually. And I've been at the DMZ for 4 years right now. When I first started off, I met with a lot of lawyers, and everybody said, "Hey, we want to come in. We want to give the DMZ some startup packages, some startup support." Until we met Goodmans, honestly, until we met Goodmans, it really was an opportunity for us to build a partnership that was really focusing on providing support for Canadian entrepreneurs who are looking to grow and scale globally. And in order to do that, we really had to be able to double down and focus on really providing them the actual value rather than trying to take, obviously, the funding at this early of a stage. So I got to give a big shout out and a big kudos to Allan because of his support and leadership in really making this partnership come to fruition. Before I pass it on, I just want to give a big shout out to two of our advisory council members who are actually in the audience. So first and foremost, Bruce is part of our advisory council, so a big shout out to you and thank you for being here. And another person is Young Woo, actually, who's part of our advisory council, who's also been here and will be actually speaking on our panel on Thursday. So we're very excited for that. So before I want to pass it on to Allan, and Allan has been a tremendous support for the DMZ startups over the past couple of years. People have been able to work through him, and they spend probably a few hours a week with Allan. And if it's not Allan at the DMZ, usually it's another partner from Goodmans, which we're very thankful for. So let me introduce Allan, who is the partner at Goodmans and also the head or the co-head of the firm's technology group, and of course the honorary member of the DMZ. So without further ado, Allan Goodman.
Thanks, everyone. Thank you very much, Abdullah. And it goes right back. The partnership with the DMZ has been, a year ago, we were looking for a way to help out in the space. And when we came to meet the people at the DMZ, we had high hopes of how it would work out in terms of a relationship. But after being there for a year, it has far exceeded our expectations. We have not only been able to help people in a way that we were hoping to, but we've also learned a lot from the entrepreneurs and from the people we've met in terms of what we need to do to focus to take this industry to the next level. So it's been really mutual. And of course, not to say the team has been fantastic and welcome us. Abdullah, Kristen, Aliza, Danielle, you guys have all been great in making us feel very much a part of the DMZ. So we really appreciate the relationship and look forward to next year and the years to come. So today, we're really thrilled to have this, as Abdullah said, esteemed panel. We're really lucky to have everyone here today. And a testament to the fact is that our CLEs never get this many people. So you're already one up on all our continuing legal education. But the idea here today is to really talk about what's happening in a very exciting time in the venture capital space and to figure out, well, we've got people in the audience today who are entrepreneurs, who are capital providers, who are policymakers. And the idea is to have a discussion today about what we have to do to take this to the next level. There's a massive opportunity in front of us. There's a lot of traction in the space. And the goal today is really to talk about the things we all need to leave here to think about to actually make this move to the next level. So we've got a list of questions from a high level. We're going to drill down into some specific funding issues, things like talent, all the issues that are out there today. But the idea is for everyone to walk away with something that they can think that they can do when they're out there working with these companies to see if they can make a difference, whether it be from a policy or from a funding perspective. So without further ado, I'm going to introduce our esteemed panel, although you know who they are at this point. So next to me is Bruce Croxon, the co-founder of Round13 Capital and former Dragon's Den and and as Abdullah said, advisory member at the DMZ. Next to Bruce is Janet Bannister, a very successful entrepreneur turned VC, general partner of Real Ventures, helping entrepreneurs reach their full potential. Next is John Marshall, who is the Assistant Deputy Minister of Commercialization and Scale-Ups, serving for the province of Ontario, serving the Ministry of Economic Development and Growth and the Ministry of Research, Innovation and Science. Under John's leadership, the Commercialization and Scale-Ups Division is responsible for working with Ontario companies and delivery partners to build a strong entrepreneurial ecosystem that provides entrepreneurs and startups, including social enterprises, with the supports and services they need to execute on their business strategy and to access capital markets. And at the end of the table is Mike Woollatt, the CEO of the Canadian Venture Capital and Private Equity Association, which is really the industry voice speaking on behalf of the entire industry and trying to make policy change and trying to understand what the needs of the industry are. So as I mentioned, we really have a cross-section here of perspectives, and I think the discussion, hopefully, I'm going to throw out the questions, but the panelists will engage and we'll see how they address those questions from the different sides of the table. So we're going to start with high level, as I say, and some stats from the CVCA. And we all have heard one way or the other that VC investment in Canada is actually very strong, and it's had its 7th straight year of growth, reaching $3.2 billion in 2016. Yet the rest of the world saw an average decline of over 20% in total VC funding. Yet some people or critics pointing to the size of the Canadian venture capital industry as an innovation hurdle. So it's a bit of a dilemma in that people are saying, well, we're not growing fast enough yet relative to the rest of the world we are. So I guess the first question, and it's from 10,000 feet, is what are each of your perspective on the current state of venture capital in Canada right now in terms of availability and size? Bruce?
Well, I think part of the reason that, if you compare us to the rest of the world, we had a lot of catching up to do, right? So it depends on where you start from would be the relative statement. I think overall it's very healthy. I think we're in a situation right now where we're starting to see second and third time Canadian entrepreneurs and exits. The talent is growing. It's almost to me like a perfect storm because we've got an ecosystem here that's growing. A lot of people are being attracted to the country that may have chosen to go elsewhere before the administration change. I think there's a branding issue that we can take advantage of in terms of attracting and retaining talent, and the cash is starting to flow. I look forward to parsing the numbers a little bit on the amount of venture capital and where it's going, because clean tech is starting to get its share as well. And my overall statement is that if you look at the total amount of venture capital that was led to the strong year last year, 11 deals, I think, accounted for $1 billion. So at the very high end, we did a lot of business. But if you start to parse it down on the growth stage where we really need the capital, and then compare it to when we were on fire in '99, and we can talk about why it's a very different environment today than it was in '99, in terms of the risk and return, we still have a long way to go, would be my overall statement. But in terms of lining up talent, the money's starting to flow. Canadian entrepreneurs can hold their own with anyone in the world. I've always believed that. We're starting to show it. You're starting to get second and third time entrepreneurs and ecosystems now where other large multinationals are starting to invest in the country, and that's only good.
Yeah.
I agree with Bruce's sentiment, and just to pick up on his point about sort of dissecting those numbers. So of the $900 million increase in VC funding from 2015 to 2016, $665 million of that was in mega deals, which are considered fundings where the valuation is $50 million or more. If you exclude those mega deals from both 2015 and 2016, the numbers are $2 billion funding in 2015 and $2.2 in 2016. So still an increase, but the increase, drops to just a 10% increase. And I think that the number of great entrepreneurs, to Bruce's point, the number of great entrepreneurs that we're seeing in Canada is growing, and I would say it's growing a lot faster than 10% a year. And so if you look at the early stage, I think that we still have an opportunity there. And I think the opportunity for Canada, just to throw out a stat, Real Ventures has been around for about 10 years. over those 10 years, we have been the lead we have invested $100 million, where we have been the first institutional investor in companies. So for that $100 million that we invested, where we were the first institutional investor, the value of those companies today is $2 billion. So it's a 20-fold increase. And so, you could ask, hey, how many of those companies would be around if they hadn't got that seed funding? And so, probably a large portion of that. So for every dollar that we invested, it produced a 20x in terms of the valuation of the companies. And so I think that just speaks to the magnifying value that an early stage investment can have, and the importance of keeping those young companies well financed.
Yeah, I think that when I started in this area, we were 14th in North America, and now we're 4th. And I think that the fact that we've had a few big deals is good. It's a sign of investor confidence, investments in companies like Blue Rock and others that, as Bruce said, were the big mega deals, but a healthy ecosystem in terms of where we are at the mid stage. And I think it reflects investor confidence. I think it reflects the fact that we built a strong foundation with things like Ryerson DMZ. We put capital in the markets through things like OVCF and NVCF, et cetera. We're now doing some big bets around transformative technologies like the Vector Institute. And I think the real next thing is actually talent. What are we doing around, as Bruce said, attracting some talent globally, and also getting that talent in. So I think we've seen, it's a healthy market. We just can't take our foot off the gas and need to keep going.
Mike?
So it's a good question, health of the ecosystem. I think one caveat to start with. I think we focus on health and numbers in terms of investment a bit too much. I think the amount raised or the amount invested doesn't really go to the health of the VC ecosystem. It goes to, yes, there's a lot of great companies out there to invest in, but without the scale that comes with these companies, it's the media and Globe Mail and these folks, and they do a great job of talking about the big mega deals, and again this, but there's a whole raft of great companies underneath that, and that ability to scale those is what we're really going to see is the health of the Canadian VC ecosystem, because underlying that data, you said the $3.2 billion, 60% of that money comes from the U.S. That's U.S. venture. 40% of deals have U.S. venture in them. So the Canadian venture capital ecosystem is coming along, I'd say. It's young. It's a relatively young industry. If you look at the total cohort of venture capital funds, pre-2001 versus post-2001, you have about 50% of U.S. venture before 2001 vintage years. You have about 60% in Canada, or 70% in Canada, sorry, the other way. It's a very young industry. The vast majority of our funds are post-2001. So being a very young industry, having big U.S. VCs playing in the space and doing these mega deals. It's funny, I do this speech about our data quite a bit, and I call it mega deal at 50 million plus, and you get a bit of a snicker in the U.S., but we call them mega deals here at 50 million plus. We're seeing that rise in the mega deals, but one concern I have, which is underlying this, is so we're relying a lot of that dollars, the $3.2 billion, as I just said, is relying on foreign capital investing in Canada. And I would argue that without a strong, healthy local VC ecosystem continuing to grow, and it's what Janet just referred to in terms of that the seed investing growing, we're a bit of the flavor of the month now with the US VCs. Might not be going forward. We need to make sure that we're here as well. Well over 75% of early and seed stage deals are exclusively Canadian invested, or at least Canadian led. So, and the US VCs won't fill that gap. So it's what we talk to government a lot about, which is the health of the Canadian VC ecosystem, obviously being the head of the Canadian Venture Capital Association. The only other thing I'd say is that $3.2 billion talks about transactions. There's a lot of other ways entrepreneurs get funding. Venture debt being a big one and a growing category, equity crowdfunding. Another one. So there is other vehicles that aren't in that stat, and angels, of course. But overall, head in the right direction. But Canadian VCs are starting to. You're seeing that scale up. You're seeing bigger closes. I would just argue that we need to be able to, the Canadian VCs need to be able to, yes, play at the, definitely, the seed and early stage and bring what they bring to that ecosystem, but also the ability to write bigger and bigger checks to continue that follow-on, but also to be able to help our Canadian companies scale domestically, I think is going to be really important.
So on that theme, there's been a lot of talk, well, in terms of the ecosystem, there's enough money at the early stage, not enough at the later stage, or vice versa, not the later stage, the early stage. So as a question for John, from a policy perspective, you've got this overhanging, let's grow the innovation economy, but how do you differentiate or how do you steer things one way or the other to say, okay, we need to really focus on this smaller space for the reasons Mike said, for the earlier stage? From a policy perspective, how do you actually direct that and break that down? Or do you even see the need? Do you look at it that way?
Yeah, I mean, I think that we don't, governments shouldn't actually pick where the market goes. I think governments should actually lay a platform for the market to go. And so I think we need to focus on groups like, Mantel and Real and Row and Genesis and Golden and all those funds that have actually helped on the startup scales. But then we need a Georgian and others on the later stage. And then, as Mike said, we need the U.S. Market to want to, invest in those companies as well. So I don't really think that we should pick one lane or the other. I think we really need both. The fact that we're number 4, the fact that we've, doing more than Texas, that's twice our GDP, is all good and healthy. But we need to have a healthy startup ecosystem, but we also need a healthy scale-up and growth capital. We're doing some things around a scale-up voucher and getting companies $250,000 to help them get the talent or skills or IP strategies that they need. And then we're running an SBIR version as well that just got announced a couple months ago by my team. So I think it's around both. I think it's around stickiness. When you look at a company like Synaptive and Cameron Piron, that's going to locate in London, Cameron could have gone anywhere on his first exit. I think he made, $85 million or something on his first exit, but he actually came back to reinvest in Ontario and to put his next company in London, where he thinks that we have a leading edge in healthcare around imaging. So, I think we need to see that as a huge success where you've got the Shopifys that are ferociously Canadian. Cameron Piron is investing back here. And how do we create that ecosystem where the entrepreneurs like Vidyard and Thelmic and others just keep on growing great companies here in Ontario? I think that's really the key.
Thanks. So another question, it goes back to picking a little bit, is that, there's a lot of talk about intelligently aligning our investment in the right high potential sectors where Canada has a competitive advantage. And I guess, again, higher level, and I'm going to ask this of both Janet and Bruce, should we be thinking about this from a sector specific perspective when we're trying to guide the economy, or should we just be saying, hey, look, let's just invest in the best companies no matter what they are? So should we have a focus on sector specific policy and investing?
So, I don't know about sector specific. I think there are advantages to being broad. I do think the one area which has got a lot of press and which the government is doubling down on is AI. As I said, lots been written about Canada has an advantage, a huge advantage in AI. Basically the founding fathers of machine learning are from the University of Toronto and University of Montreal, and then the University of Alberta in Edmonton also has a huge AI. What do you call it? Whatever, a huge AI presence, lots of great professors, division, and so, how do we keep that talent here? And so the recent launch of the Vector Institute, I think, is going to go a long way towards that, and other initiatives that we're seeing from the government and from private industry. I view AI very much as a horizontal play, not as a sector specific, right? Just like mobile affected every single business, AI will affect every single business because every single business needs to figure out how do we take our data and use our data intelligently to give us a competitive advantage or to better serve our customers.
Yeah, I couldn't agree more. AI as a horizontal play, is it? And another way of saying the same thing would be, look, there's no pure AI businesses. It's every business is going to be using AI. We don't know exactly how, so we've got some talent. We've got a head start. It's going to be omnipresent. Makes all the sense in the world to keep our talent here, and in the past, that talent would have escaped. So Janet and I both invest only in Canadian IT companies. It doesn't pay to be sector specific when you're focusing on a country, notwithstanding the fact that technology is moving so quickly that it could also spell your demise if you focus too narrowly on any one particular sector. The other point I'd make is that in IT, it really isn't about the technology anymore. I mean, I built an online dating company starting in the sort of late 80s, mid 90s, and it was expensive, it was complicated, and took up 3/4 of this room. I could do that same company technology-wise with a couple of smart engineers, 2 months, and 1/100th of the cost today. So technology as a barrier to entry isn't the same as it used to be. So what is? It's sales and marketing. So that is when companies get a hint that customers may be taking part in their product, and they can identify a channel or 6 where you can get a whole pile more. Our job as venture capitalists is to put some money in and allow them to continue to attract customers at less than what a customer is worth. So sales and marketing is the new barrier, and that crosses all sectors. I mean, there isn't a business in the world that doesn't require it to be presented and marketed to a constituency. So that, I think, is an area that we can really develop a competitive advantage, if you will, or at least hold our own with anybody else.
Okay, thanks. We talk about, or we hear a lot about Vancouver, Toronto, Waterloo, Guelph, Ottawa becoming recognized now internationally as reinvigorated startup communities and the sources of real great success stories. I'm going to go to the other end of the table, Mike and John. What do you think have been the factors for those specific hubs being so successful in this latest wave of venture capital stories?
Well, I think it varies across them, but there is, well, it varies in terms of what sectors they've ended up in. But when we did round tables across the country last year talking about innovation with the government, but also ourselves, and I wanted to touch on your last question as well. But it comes down to talent. It comes down to recycling of talent. And when you see what's going on in Vancouver, there's a particular recycling of talent going on there. The proximity to Seattle really helps, particularly now with what's going on. You see a lot of Microsoft and others having headquarters now, and talent headquarters up in Vancouver. You've got in Toronto, you've got obviously a real base, but none of this, when you look at any all the VC investing, you talk about it, it all comes down to effectively all comes down to talent. Effectively, it all comes down to if there's great entrepreneurs doing great things, there's stuff to invest in. They take money, they recycle their own talent. So I think it comes down to that. In terms of, I just wanted to touch on your last question. I struggle with it, the sector one, from it dovetails with what you just asked, because when we did these roundtables and we asked the VCs and entrepreneurs across the country, should government and policy be focusing on sectors, and should they target in certain cities? And maybe we pick some, right? So maybe in Toronto it's AI, maybe in Vancouver let's do social media, and in Montreal. And I would get, I'm not kidding, half and half. Half people said that is a terrible idea, and here's why. Montreal tried this with video games a while ago. It was a disaster. Vancouver tried, like a bunch of cities have tried this. Like, go at it. When government tries to pick a category and run at it in a certain city, they're inevitably too late. Whereas others say, no, that's total BS. You got to double down and go hard at a certain sector, which is why, for instance, in Toronto, I'm a big fan of what's going on and with the AI for just what Bruce and Shannon said, which is sometimes it becomes obvious, right? Sometimes it's just obvious. We have 3 of the godfathers of AI in the world in our country. Let's keep them here and let's recycle that. So it becomes obvious, and of course that's cross-sector. So I think governments can, it's a way of answering your question in a way in that governments can feed that talent recycling by, it becomes obvious in a way. Toronto, wow, geez, look what's going on at UT, look what's going on in AI. It's a cross-sectoral play, but also there's a talent that we need to keep here.
Yeah, we're not going to make money on AI yet, but it's inevitable that we will across many different sectors.
Yeah.
So that's an excellent role, right? We're out ahead of our skis in that category, but I'm not going to.
So let's give them, from a government perspective, let's give them the resources to be able to keep the talent here and focus on growing that, and then we'll get there.
Mm-hmm.
Right? Yeah.
I mean, I think the other part of this, though, is I'll go back and you guys can Google it. In 2005, we launched a thing called the Ideas to Market Strategy. And that was really around two premises. One was demand for capital, and one was supply capital. So investments like Ryerson DMZ, Campus Linked Accelerators, Communitech, Mars, all those things were around creating a demand for capital and creating stronger companies, et cetera. And then supply of capital was the Ontario Venture Capital Fund, Barry Jaguar and IAF, NVCF afterwards, OETF when the market crashed in 08, and we had to step in for a year or two. And those have attracted people like CPP, IB, and others, et cetera. So we played those two. The third play we're now making is doubling down on certain areas like AI, but also like quantum, like 5G, like robotics. We're going to make some plays around things that are going to be platforms, as Bruce said, for which the startups, we need to, I think the key on this next generation is how do we build from these platforms and have the startups actually adopt those, because Google and Facebook and all these companies are all using AI right now. And so how do we actually have our startups adopt these technologies and use them to their competitive advantage based on the Allan Hintons and others that we can actually build from? So the government's making some big bets right now, and it's pretty big dollars, like $50 million into an AI institute out of Ontario is a pretty big number. But we got $80 million from industry to actually co-invest alongside that, right? So that's industry and government betting together that we actually need to double down on things like that.
And that's the trend with government policy is private sector led, right?
So now, on that note, we're going to move to actual funding numbers, and obviously we had the budget come out last month, and so there's a lot of new developments in there that we're going to touch on today. So under the previous regime, we started with the Venture Capital Action Plan, which people considered to be quite successful for the very reasons we just talked about, stimulating private money to come along with the government money to move this sector forward. The budget just recently announced a new venture capital catalyst initiative, slightly different name, that will make available up to $400 million in late-stage venture capital. So, Mike, the CVCA was vocal in asking for VCAP renewal under sort of the same type of plan, and you subsequently came out in support of the new catalyst renewal plan. Maybe you can help us by describing what your read on the differences and why you think it's still going to be successful in the same vein.
That's a great question. The first one is I kind of have to support it. No, I'm just kidding. That's the first. So by the way, they're calling it Vicky now.
Okay,
Vicky.
Vicky.
VCCI. I kind of like it with our push on women in tech and things like that. Anyway, so yeah, we pushed for a new VCAP program for a lot of reasons. It's been a phenomenal success. And from 2012 to now, investing now something like $800 million. But really what I like about it, and this is why we pushed the government to do the same thing again, is what you said, the private sector led. But most importantly, I think, it's bringing new and returning investors to the VC ecosystem, because that's the key to sustainability. At a time where this ecosystem's growing, at a time where returns look good, we're introducing a bunch of folks that either haven't touched it in 5 years or plus, or have never touched our ecosystem, like from international investors. We have folks like HarborVest here because that program. And HarborVest being one of the largest VCs in the world, fund of funds. So, we're introducing a whole ecosystem to venture. So I really love the program from a policy perspective. So we pushed for it. Others pushed other things. So we had some competing interests there. And so the government effectively threw up their hands. Prime Minister's Office and Finance said, well, there's a bunch of smart people saying a bunch of different things. Tell you what, we're going to put $400 million. We actually asked for 400. They said it was going to be 300, so 400 was a surprise to me in the budget. But they said, we put 400 million in, and now we're going to have an ideas competition, is effectively what's happening now. So the minister, former Minister of Industry, Minister Baines, is leading a process. He still hasn't defined what that process is, for what this thing is going to look like. It could look anything from a matching fund entrepreneurs, which I think would be a big mistake, to all the way through to a VCAP 2 effectively without the name.
What do you mean by matching fund entrepreneurs?
Well, one of the ideas that's floated, so there's a lot of companies. So the parameters in the thing is in the budget is just, here's 400 million, come up with some ideas that, if you have ideas, you can pitch them. Come up with ideas that's going to raise funding up to $1.5 billion matched. So if you already have money raised, you can go and say, I think this is a good idea, we should do it. So it's fraught with problems in some ways because now they're stepping on each other trying to decide what this means. BDC has, who's running the program, has its own strong views that it should be an external fund of funds program, just like VCAP 2. But there are others that have pitched, everything from an entrepreneur matching fund all the way through to a VC matching fund. There's a lot of other options to match up.
Here's one thing that VCAP 1 didn't do.
Yep.
And I agree, Mike, money into the system. It was a tough sell to corporates and the banks, and it took a long time.
Yeah.
And there was some arm twisting that went on, right? For sure.
Yeah.
If I'm, as an entrepreneur, started, grew, exited a tech company, I'm willing to invest my own capital back into the venture community. And if I can convince a corporate that hasn't played in a while to come and invest with me into the ecosystem. A tinker, I would suggest, is allowing me and the corporate that we bring to the table to have some of the same benefits that you would have got had you gone into a fund who then chooses who to put the money with. Is there is that a wrinkle that we?
So they're looking at all the options. My best guess is we're going to end up with a hybrid. My best guess is we'll end up with part of it being an external fund of funds program based on the strong suggestion of BDC. Part of the problem becomes in that model is you might have 100 of those. And therefore, from a government perspective, that's a lot of heavy lifting, deciding who gets what, right? And who we're matching. Whereas with the VCAP 2, it's a few fund of funds that then do a lot of the heavy lifting in terms of deciding, and then the VCs do the heavy lifting in terms of deciding the companies, so a bit of a trickle down. I think you'll end up with a hybrid, like we did last time, where we had 350 million, and then 50 million of it went to a direct high-performing funds. And so I think if we do end up there, I think that's probably the best situation. There's a need to continue the program for a lot of reasons on the fund of funds side. Yes, there was arm twisting. I think the folks that were arm twisted would tell you that they've seen they deserved it, as Mark would say. Some of them certainly deserved it. I think that's safe to say in terms of the amount of time they spend and money they spend in the innovation ecosystem. But as well, they're seeing returns on that.
Yeah.
So I think it's going to be easier.
No,
next time.
it's a great time to be participating, and the more the merrier.
Yeah. So my point is I think it'll be less arm twisting and it'll flow faster than it did last time.
But there's two reasons for a corporate to participate in venture, right? One is they've got excess cash on the balance sheet. It's got to go somewhere. Maybe we can get a return out of this, and it's the right thing to do for the country. And the country's been good to us in the case of the 5 banks, or 6 or whatever. So, and then it's I've got some strategic priorities that I want to achieve, and the way I'm going to achieve my strategic priorities is pick the fund that I want to work with because I like them or I think they've got something to add to my corporate strategy. And that's the only thing that's kind of lost in the way that VCAP 1 is structured now. So, because we have people gathered that are obviously interested in it as a topic, I'm just throwing that in as a way to tinker, right? Where you might be able to draw more. And I've had very specific examples of corporates that wanted to play, but then lost, when they saw they were going to lose control about where the money was going to go and how that aligned with their objectives. You
can also give them co-investment rights and things like that, though, too.
You can, yeah.
But I think, though, Bruce, the third pillar of your corporate thing is interest and cash, but is also primarily returns. When I was out trying to get OVCF off the ground, I remember I used to say that good thing my feet were longer than my nose, because when people were slamming the door saying we weren't going to do this, at least nailed my toe and not my face, right? And the interesting thing about that was people didn't believe that venture could make money, and what we've actually proved through OVCF is that actually venture is making money, and so that's the fundamental driver. So I think that the third pillar is we need to have a market and market-based returns to actually continue this ecosystem. Yeah. The other thing I want to just say on the VCAP thing that kind of, when I read it, the notion of late-stage capital, I've heard people say, oh my God, there's going to be no early. I think it's around emphasis, not around a sole or exclusion. I think that VCAP will still be about early and late. I think that we all recognize that we put out more startups than Silicon Valley, but we need to actually have companies that can scale up, that can be the next Hootsuite and Desire to Learn and Shopify and those, so that I think it's around emphasis, not around exclusion.
Yeah, I think on that late stage point, so the VCAP 1 disproportionately funded seed last time. That's part of the response, is that there's a lot of complaints around that mid-stage scale-up. It could do more, but let the private sector figure out where the returns are. That's the whole point. But on the late stage point, I think it's sometimes we parse budgets a bit too. I was part of writing budgets for governments, and you're writing a novel in 2 weeks, right? So, and by committee, so it can get kind of messy. And that there's a line on the Wiki that says late stage, and then brackets that says revenue. So they're kind of calling late stage all companies with revenue. So I said, so what do you mean by this? Is it like late stage to us means something different than that? And they said, well, it could be a few things. And then I said, but what's going to come, right? So you said it has to be revenue only, if I read that. Every health and life science VC is going to run at you hard and say, well, so we're getting nothing? Because there's no revenue when we invest in these H&LS companies, or a lot of them anyway. And said, no, we didn't mean that either. So I think there's, just to your point, there's going to be a lot of fine-tuning of this thing as we go forward, but it's great. It's a big source. The U.S. VCs, yes, are a big source of the growth of what's in the investing stuff, but what a big source of the fundraising and the number of closes in venture, and also just the money that's flowing through, has to do with the first VCAP program. And that money is multiplied again and again and again. So we talk about it. The original one went from $400 million to $1.3 billion. Yes, the fund of funds all raised, the matching 3-to-1, so it was about $1.3 billion. But they were also the first closes, or institutional closes, for all the VCs that then go out and raise more money again. So it's multiplying threefold. We did a calculation, it was 13-to-1. So you have a huge amount of direct impact in the ecosystem now flowing through, right? So we're on year 4 of it.
That's fantastic. Let's hope that it works out the way it did the first time out.
Yeah, and I told them time and again, I don't care if you call it the Sunny Waste Fund, I just want it. So Vicky, they came up with.
So on another budget initiative, there's a particular focus on clean technology. We're $1.4 billion in new financing on a cash basis over 3 years. So the question is, from a Canadian perspective, do we see a particular advantage for Canada in this area? And in fact, what will that $1.4 billion be enough to grow that to the level that we need to take us to the world stage? What's anybody's view on that? Maybe Bruce or
Not on clean
Janet?
tech, no.
No, move down.
I think that the government has put a lot of money into clean tech, and I think we're well positioned. Whether that's from an energy, when I look at Alberta, from a mining standpoint, from a water, and I look at this from consumer demand is going to increasingly expect more and more from us in terms of the environment and what we do from a market basis. And then investors are increasingly looking at their ESG policies and what they're actually investing in. When you look at the board asking teachers questions, or CPABIB or others. So I think that the market is going to move there, and so we just need to be able to move with the market. I mean, 70% of the market is still ICT, and so the market will dictate where this goes. I was chatting with, not on clean tech, but with Ian Klugman the other day, and he said 4 out of 10 companies at Communitech are focused on health technologies because it's health IT. It's how do you find a doctor better? It's how do you get access to the device? It's a Samsung Fitbit that doesn't measures your blood pressure and your lipid rates and all kind of stuff. So whether it's clean tech or health tech, we have a strong foundation with University Avenue in the market, but the market will go there, and I think that's what's going to happen. Also, you look at the GGRA and the revenues that just came out of that auction. That money is going to go somewhere, and hopefully it goes into industries and companies so that we can actually continue to grow the clean tech industry here in Ontario and Canada.
Clean tech's a tough business. It's
tough to make money.
It's tough to make money.
Yeah.
Most clean tech VCs will tell you that this is really hard. No, just kidding. Clean tech suffers from a categorization problem. You see a lot of the VCs shifting gears a bit, calling advanced materials, IoT, calling themselves something else. They suffer from a categorization problem. This is worldwide, not Canada. It's a tough business. A lot of it is project financing. It's $500 million into an unproven technology. A lot of it doesn't fit venture model. A 10-year life cycle on something that is much longer and much bigger and much heavier, and you get diluted right out, can be a problem. And that's where an EDC or a government can play a role, or even, as I've been saying to folks, even this infrastructure bank on the other side can play a role in terms of funding some of that. So you're starting to see what's happening in clean tech is, and I was talking to PitchBook and the other data providers around this, they also suffer from a data perspective. All the cool growing stuff that clean tech would make money on ends up filtering into other categories, like, oh, well, this is ICT, or oh, this is an AI play, or this is an IoT play. It's not, and so it's falling out. And so what's left in that bucket, if you look at the performance of clean tech, is hardcore clean tech, which is a slow build, long game. So yeah, government has a role to play in that one for sure, and they do around the world, everywhere. They either through tax credits or direct funding or something, especially around that traditional clean tech.
So we touched on this earlier. I mean, we've got a lot of new players to the table, but how do we attract more new sources of investment? The TMX's Advancing Innovation Roundtable had recommended private market solutions address some of the gap in growth capital. In response to that, a group of major Canadian banks and insurance companies announced the Canadian Business Growth Fund, pledging $1 billion to invest in scaling up small and medium-sized Canadian companies. It's a nice commitment, but how do we actually bring that to bear, bringing these new players and getting them integrated into the system? Janet?
Yeah, so I've had experience with some of the big banks and insurance companies, both investing directly into our portfolio companies as well as investing into our Real Ventures Fund. So I've had experience. I think my two big questions as I think about this is, first of all, how are they going to, do they have the right skill set to select the right companies, to do the investment, and to add the value? It said, it takes 10 years to build a great VC. I mean, it is like a great VC professional. It's very difficult. It takes a lot of knowledge. And do these institutions have the knowledge in-house to do that? And also sort of tied into that bucket is, can they respond quickly? Generally speaking, these institutions do not move too quickly, and certainly not at the pace that most companies need to have an investment decision. So that's sort of one bucket of questions that I would want to understand. The second bucket is, what about companies that are going to challenge them? So I sort of divide the fintech world at a very high level in terms of, and it also applies to insurance tech and other categories, to enablers and challengers. So enablers are companies that actually work with the established players to make them more efficient, to enable them to offer more products, services to their customers. And then there are challengers who are going head-to-head directly trying to unseat the major players. And I wonder what is going to happen to the financing. I would to those challengers, and presumably, or not presumably, but are they going to get the funding? So I don't know what the solution is. I would say that it's great to see more capital going into the system, but the devil is in the details in terms of how is this executed, who makes the decisions, and that will determine the impact on the ecosystem.
So we had actually studied the UK model, and the UK did this. The banks were basically shamed into doing it because of after 2008 in the UK they hadn't invested in the UK economy enough. And so the problem with that program was it was peanut butter, right? It was, hockey rinks, and they don't have hockey in England, but, hockey rinks and, theaters, and it was kind of anything, right? And they had to make sure that it was all over the UK and it was all equal. My hope is that they actually focus on tech and they focus on the future of the economy, and they put put that money to it. I agree. Who's going to manage it, the teams, et cetera, is a big issue. But I just hope that we target that money. And I've been chatting with others because we looked at this, and actually then Minister Murno and others kind of took it on. This blend of debt and equity financing. I think we've done a lot in venture, and the banks don't know how to value a company that has no assets. How do you value the technology if it's not a thing that you can sell if it goes bust? And so I think that we need to look at that. How to the blend of doing some debt financing, but then not strangling the company on debt servicing costs, and then equity, but yet not having the company lose control. So I think that governments need to be flexible in terms of how we go between those two chasms of debt and equity, and be able to go back and forth nimbly to make sure that we actually grow a company. Because in the end, that's really what this is about, is growing some big successful companies, I think.
The topic of debt is an interesting one, at the risk of pivoting, but it's interesting. The thing that characterizes software as a service companies, which make up a lot of what we're investing in today, versus 1999, where venture got this rap that you're going to invest in 10 things, like hope like heck 4 are going to work, and really pray for the one to make your returns. And the climate has completely changed. And I think what it's opening up is, so characteristics of a software as a service, business to business company, growing monthly recurring revenue of software that gets so firmly embedded in the customer's operations that unless you as an operator really mess up, you're going to have that client for a very, very long time. So what we call churn, the amount of customers that fall out the bottom, is in a lot of these companies is minuscule. So the opportunity to provide debt capital with no hint of profit on the horizon, because they're in growth markets, continuing to attract customers for less than what a customer is worth. Why would you put anything to the bottom line if you're growing market share? But at the same time, you can count on that recurring revenue line as a way to service debt, because it's not going anywhere. So I think the banks are starting to open up to that as a candidate, those companies as candidates for debt funding, and I think that bodes well for even more traditional money coming into the system. Right?
From my perspective, the bank growth fund, so all liquidity is welcome in the ecosystem, and more money, the better. I understand the banks are looking at a lot of non-venture deals in that. I don't know what that means. They said $3 to $20 million bite sizes and growing companies, which sounds like it might be venture, but maybe it's also, to your point, maybe they're looking at some hockey rinks and things like that as well, or slower growing assets that don't feed venture so much. But the policy quid pro quo here is important. So what I've been telling folks quite a bit is, apologies to any banks in the room, but don't let the banks off the hook because they're doing this. This is their fund, and I just want to make sure that this isn't them saying, see, look, we're doing innovation, we're here, and so we don't need to do anything else. Each bank probably put in, if it's a $500 million fund, it's going to scale up maybe to $1 billion. But right now they had that headline, but really it's an early close of a VC, like a VC early close, So it's $500 million now, and then they'll see. So it's $500 million bucks. So the average bank is what, I'm guessing 50 million in there, something like that, because there's a few insurance companies in there. Very small amount of money from what the banks make quarterly, right? So I'm not in the shame game. I think that returns need to be there to justify a market, but I think when banks start to play, they can influence returns in many ways if they start investing. So it's a bit of a chicken and egg. So that's the first, is I want to make sure that the banks aren't using this as a way to not do VCAP 2 or not do something else. That's number one. Now, the second is there's a policy quid pro quo here that's running, which is the banks have a reserve requirement, Basel requirements around what they can hold in risky investments, and the government is working hard to reduce it against that. To Janet's point, I keep saying, well, if they're going to reduce it for that one, a brand new fund, untested, run by themselves, I would argue that's riskier than putting in an established venture fund in Canada that has a proven track record. Therefore, I want the reserve requirements lowered for any established venture, not just their own. And so that's a policy discussion I'm now starting to have, trying to figure out where this goes. So, there's more to come, I think, on that.
Great. So We're going to shift gears a little bit. We've talked about money, but also a big part of building this ecosystem is everything that goes into it around supporting these companies. And obviously near and dear to us, accelerators and incubators like the DMZ have been critical in fostering the ecosystem so far. And we've got the new AI Institute at U of T to come. I'd ask, I guess I'll go to John and Mike. There's been a committed focus to continuing that development of these institutions, but do we need more of these institutions, or is the idea now we should put money into what we have and not dilute by having too many of these accelerators and incubators around?
Yeah, by themselves said, usually the Association of Incubators said, when the Liberal government put out the platform, 400 million, said, let's figure ourselves out first before you start doing this. I think most people would agree that there's some amazing players in this space. Let's keep them growing. We don't necessarily need more. I don't know, what do you think?
Yeah, I mean, when I saw the superclusters announcement, I was both optimistic and scared at the same time, only because, we saw it on the federal CSER program where they actually funded new things, right? So we have things like Communitech and Wires and DMZ and others. Let's double down on some of the things we've got. We're doing a review right now of our what we call the Ontario Network of Entrepreneurs, the one network, which is Mars, Communitech, Ryerson, et cetera, Invest Ottawa. And we need to, that's going on right now with a third-party group looking at that. We need to look at all that together. So hopefully the feds actually invest in clusters that we're actually trying to drive, like AI and others, and in centers that we're trying to drive, like Ryerson, to actually build on that ecosystem and actually give us more tools and more interconnectedness. I think the other thing that's going on here is that, AI isn't just a Toronto play. AI is going to link MAC and Waterloo and Invest Ottawa and all the network. And so we need to actually figure out how we actually get more going on, not actually less, because these are big bets.
Sorry, could I just add to that? So I think that the accelerators, incubators have had a huge impact on the ecosystem. It's great. I am particularly encouraged when I see incubators, accelerators programs that can survive and thrive without government funding. And so I think that there's a huge role to play in that. Creative Destruction Lab out of University of Toronto. I think now they get a bit of money from the university, but they're primarily self-funded. In the early days, they were totally self-funded through corporate donations. Real Ventures recently announced that we're going to be bringing Techstars to Toronto again, totally no government funding. And so I think that there is absolutely a role for the government to get involved in, but I think that we also need to make sure that we are building the ecosystem of accelerators and incubators in which the taxpayers don't need to pay, but that are still doing great things for the ecosystem.
Yeah, I think we have more incubators per capita than anywhere outside the valley. I think we're good. There is a lot of $100,000, $200,000 checks. Angels are getting organized. You've got angel groups. You've got people that have, the market's been on a roll. You've got people that have made their capital in other areas that are willing to play directly in tech. It's a whole other conversation. But there's a lot of early support, right? I find it very ironic that as some of these startups start to de-risk, because it's the single riskiest point to play in a arguably a very risky sector. Every tech idea walks through our door, I think, wow, my first thought is, that's amazing, it looks great, right? And then you start to do your work and find out that it isn't so. But so a lot of money going directly into early stage, there's a lot. But the irony to me is when, especially in the SaaS world, when you start to de-risk some of these companies, and you can see that the revenue's not going anywhere, it gets tougher for these companies to find the capital in the country. And it's being addressed, and this whole panel is about addressing it even more. So I think we're really good at the startup stage.
I think, though, it's a complicated market. I was saying this to Rebecca Yu at JLabs when I first met her in this new role I have, and she's like, John, it's really complicated. There's so many different players and actors, and I'm like, well, yeah, we're not just Kendall Square in Boston. We're Kendall Square, plus we're an ICT hub, plus like this. Canada is a diverse market, and thank God we are, because we have real strengths in life sciences, we have real strengths in IT, and so we're not just a single. When life sciences is doing well, Kendall Square does well. So I think that we have to understand understand the complex and diverse market that we have in Ontario, and our network reflects that. But I do think we need to look at the network and see, to your point around private incubators are important. Where is there market money behind a lot of these things, and where are they going? Yeah.
So another topic we touched on earlier that's really important to this whole ecosystem is talent. It's always a big topic in the newspaper. It's an integral component of building the strong ecosystem. And Canada's labor and high skills talent pool, sometimes people say we have enough, it fuels it, or we don't have enough. And the recent global skills strategy announced last fall was to fast track visas and work permits for talented internationals to come over and help the ecosystem. I guess the first question is, do we have a problem in Canada? Is this really important? And with all the talk about U of T and Waterloo and people coming back to Canada, is this a big issue, and do we need to address it? I guess both from the investing side and the policy side.
It's a huge issue. Everything we've talked about is about growth and more money going in and more deals being done, and you have to have the people to scale with. And I think up until relatively recently, the sort of senior VP, been there, done that, gone through a couple of, not quite on the entrepreneurial CEO, which we have a lot, but the support, right, that allow the companies to not have to sell early, right? When you look around the table, say, geez, might not have the talent to make, it used to be, might not have the talent and the money's not here, so, we sell short a lot, right? So the money's starting to come. We need the talent to keep up. So, I've been accused of being overly patriotic. I think it's the best country in the world to live. We've got a great card being played south of the border now with a brand that is, whether in perception or reality, is the brand is anti-immigration. I can't tell you the disproportionate number of entrepreneurs that show up in our office that are first generation or newly arrived in the country, hungry to succeed. So anything we can do to ramp that, this is our time. This is our time. It's a void. This is our time to step into it. The only thing we don't have compared to California, we have February, right? which is a fucking drag, right? No question. So nothing we can do about that. But other than that, it's it's the best country in the world. So this is our time to step up.
Yeah, absolutely. I agree. I think that Canada needs a lot more talent. We're definitely getting better. I think it's a flywheel where the more great companies, young entrepreneurial companies that are created that talent, as was mentioned earlier, can be recycled. But I think that we have great universities. We graduate, more STEM graduates from Ontario than from California every year. The issue, I think, is that we don't have enough. Bruce mentioned this earlier. It's the marketing and the sales, right? Companies are not going to win on technology alone. It's all about execution of the sales and the marketing. I'm recently reading a book on Uber and Airbnb, and both of those, when those companies started, there were several other companies had the same concept started at the same time, but they won because they were able to out-execute them. I spent 4 years living in Silicon Valley, and a couple things. First of all, almost everybody you meet in Silicon Valley in the tech industry did not come from Silicon Valley. Like, they moved there from across the United States, around the world, because they want to be there. And I think the same thing for us. If we want to create huge global companies, we need to be able to attract the best talent to come to Canada and to come to the hubs and really to leverage that talent in order to create the next generation of great companies.
On a question for you, on the sales side, I hear it a lot, and then I also hear, well, you could just have your sales team in the U.S. or should the sales team in Canada? Do you have as investors? Sorry, I'm hijacking the questions, but
no, absolutely.
as investors, do you want the sales teams in Canada, or because a lot of the customers are in the U.S.?
Yeah, I think it really depends on the situation, on the particular type of company, in terms of how much is inside sales.
Right.
Obviously there's pros and cons, right? There's benefits of your sales team to just everybody in one location, one office, sharing of knowledge facilitates the management. Flip side, if all your customers are in the United States, it's a person-to-person transaction, or sales process, then you may want some salespeople there. But I think in the early stages, it's often easier to hire your initial salespeople locally.
I'd also draw a line between sales and marketing. I mean, when I left the dating industry, I knew to a penny what it cost me to get a user, and I knew to a penny what a user was worth. I'm very familiar with marketing dashboards. That is, we lost our way a little bit, right, in terms of the metrics around customer acquisition and that whole discipline. And I would like that here. I would like that here in the companies that we invest in. So it's about the leadership layer, right? The 2 or 3 critical head of sales, head of marketing, been there, done that. In terms of the force, the sales force, if it's feet on the street, yeah, I actually prefer to have them in the market that they're dealing in.
Yesterday, I had a guy named Charles Plant. He's a senior fellow at UT in my office, and he manages a narwhal list, he calls it. And he's got 300 of the fastest growing companies in Canada on his list. And I'm going to butcher this fact, so I apologize to anyone who's in academia. But Charles had some fact. If I had my notebook, I'd grab it. That the U.S. companies invest 70% more in sales and marketing than a Canadian company does. And we invest 70% more in the technology than the U.S. company does.
That makes sense.
And we don't build our sales and marketing teams early enough, and the U.S.
So we grow slower.
So we grow slower.
Yeah.
And so Charles, this is a plug for his report, in 2 months is actually releasing a report out of UT on this exact fact.
I would agree with that.
Right? And so anyway, so look for his report, and I've just butchered his entire
But
research.
the challenge is clear, right? The
Yeah.
challenge is crystal clear. You're absolutely right. We've got the best engineers in the world. Everybody acknowledges that. They're all in here trying to pilfer them.
Right.
Or, second best, set up shop so they can take advantage, which is fine.
Right.
We need to grow the sales and marketing competence. The other thing, tactically, is we need a way for people that are working in Waterloo to get downtown quicker than sitting on the 401, right?
100%.
I mean, it's a lifestyle issue.
We're working on that. The other one I just want to say.
Can you get going
Can you
a
get
little
going?
faster?
Metrolinx. The other one I'd say is, and this was ironic, and this wasn't planned, was the day of the U.S. election, billboards went up in California on the Go North Canada campaign.
Right.
I think we need be a little bit more aggressive around that kind of proactively marketing the fact that, and we all know that it's more expensive now in the Valley. It's too expensive to actually grow a company in the Valley, which is why like Samsung Research has the research group there, but that's it. They grow the companies elsewhere. And I think that we need to be more aggressive about saying you can grow your company here in Ontario and come to Ontario and you can grow a great company. And I think we need to be more aggressive about that.
February.
Yeah, we got partners.
Except for,
There's a
and
few
having the
companies-
NBA All-Star game in the coldest
All
day in
that,
Toronto
yeah.
was terrible.
That was
terrible.
unfortunate.
There's a few companies talking about, Stephen Lake from Thalmic has had a great, he wrote a little blog/report that I've sent to literally everybody I can think of around the cost. Dear engineers graduating out of Waterloo, here's the real cost of living in the Valley versus here, doing that kind of thing. Sierra Wireless moved back up to Vancouver as a result of talent. They're starting to see that cost. I do agree we need to get more proactive. I think unless there's like 5,000 STEM engineers in the U.S. flying United Airlines, we're probably going to need a different kind of approach to get them up here. But from a marketing side, from a policy perspective, there's two answers, right? There's a slow answer and a quick answer. The quicker answer is fix immigration, make it easier. Government's doing something there. We'll see if it works. That global skill strategy. Now you get a fast track visa in 10 days, 10 business days. I still think it's bullshit. I can't believe they could figure that, but. Good for them.
We're going to pre-qualify the company and then get the visa in.
Right,
Yep.
but still, it's really fast. Anyway, so that would be really great. And then the other is just through education. That's a slower build, right? That's Canadians learning code. That's funding a lot of that stuff that they're trying to. But one's 15 years and one's relatively quick.
The option, the stock option thing, we dodged a bullet there, right? Because that's.
Big time.
I mean, the fact that you can, the favorable tax treatment on stock options is going to breed a lot of millionaires that will reinvest and that will want to do their own thing. So thankfully, we hung on to.
Yeah, because I think the overall tax rate matters. I wouldn't overemphasize it, but I think it matters. I think in Ontario, when you're talking the highest tax rate kicking in at what, 200K Canadian, and which is like what, 75 US or something. But so 200K Canadian, and it's at 53%, and you just want to butcher the options up to 100% inclusion. I think folks start doing that math and say, well, wait, the highest rate in the US kicks in at 400. I'm from New York or the Valley, where California has similar rates, but only when you get above 400. So, a lot of engineers are in that sweet spot. So they start doing the math with their families and et cetera. And everyone has mortgages and bills to pay, right? So all of that stuff matters.
So another way that government can help is through their own buying power to really help emerging high potential companies. And the Build in Canada Innovation Program was designed to have government become a key customer for startups. I guess first, a question for Janet and Bruce. Do you see that as a way to help companies that you work with grow? And this $50 million government fund that's announced, we can talk about how would that be helpful? What can they do? Is it to speed up the process, I guess, dealing with government?
I mean, I think absolutely, if they can be a customer to early stage companies. I know that this is a model that has worked around the world. I think it remains to be seen exactly how it will work and how quickly they will make a decision. So I think, again, it all comes down to the execution. I think that the concept is right, but will be interesting to see, basically how many hurdles do the startups need to jump through in order to be considered, and how long does the decision-making process take?
So we actually launched a program called the Small Business Innovation Challenge, and it was modeled on the SBIR program in the U.S. And so a company, so we were putting out challenges. The first two, one was around HOV lanes. How do you know there's two people in the car and not a person and a dog? How do you know when they come in and out of the lane? How do you bill them? How do you get the money? All that kind of stuff. And the other one was around identity. How do we, using visual identity and other kind of identities, who are you? Are you really that person now? Are you eligible? So those two went out. I can say that we got, I know this is public, but we got a lot of proposals for our identity challenge, and in 3 weeks we'll get the one on the HOV lanes. But I think it's realizing that the government is a market, that the government can actually put out public sector challenges like identity, or so we don't have OPP officers sitting on HOV lanes to monitor when someone's in and out of a lane. And we're going to use it maybe on our realty platform. We're going to use it maybe on Elections Canada. We're going to use it on a lot of things. So I think government's realizing that they are not just taxers and spenders, but we're actually a market for small startups. So this program, you can get $100,000 to actually on the feasibility of your idea, and if you're selected, there will be 6 companies selected, or consortia, because no one company will own visual identity or identity. You're then eligible for $1 million. So I think that it's government's actually becoming a market to actually enable early stage technologies, companies to actually demonstrate their technology using the government as a market. So
on the federal government side, we've been talking about this for 40 years. We need to procure better. We need to procure better.
Yeah.
And there's been various different. We had something called, when I was in government, we had something called smart spending, as if the previous spending was really freaking stupid or something, but now smart spending. But it didn't really work. So to Janet's point, we'll see what happens. It's always a frustration for me. I think there's 2 strands of conservatives. I think the entire federal government is conservative fiscally in how they think about this kind of thing. I think you've got these fiscal conservatives in Canada spending, and you've got these populist conservatives in the U.S. spending. One says buy cheap, one says buy American. And the populist conservative strain, that Buy America in the U.S., has really helped U.S. companies. Now, of course, some of it's defense spending, but Silicon Valley was built on defense and NASA contracts, right? That's what is driving it. There's a $4 billion sub sitting off the coast of Georgia with Georgia, the state, or it's probably moved to near Syria now. But anyway, it was there, and it has probably $1 billion worth of tech in there from the Valley. They have a huge advantage in their military procurement. They have a huge advantage in their space program and their technology program that isn't NAFTA eligible, so they can get around that. But we too often do this. I was part of a trade group, a secretariat thing, part of that SMART initiative, and one of the U.S. government guys just said, "You guys are way too Boy Scoutish with your trade. Like we don't push. Oh, it's not. We got trade agreements. We got to buy the cheapest. We can't buy Canadian." I think that's where. I think with what's happening south of the border, our natural response is going to be that. How far that goes down the policy road in terms of no trade and all this starts to scare you a bit. It's a bigger picture than we want to get into now. But without a doubt, it's just I find it frustrating. And
Right.
I think we can do a lot more. Hospitals, universities, like there's a lot of other areas that we touch, not just straight.
All I can say is anyone that shows up with a plan that's predicated on the selling to the government market or the school market, I run, I don't walk away, I run away. I would love that to be different. So however that's going to happen, I'm all ears, because the beauty of it is, it's never going to be an easy market no matter what, however reorganized we get. So if you can get in there, that becomes a barrier to entry in and of itself, right? So I look forward to, not running away from people that are listing that as distribution channel 1 and 1A.
Maybe right now, just like walk quickly with looking back.
Exactly, yeah. Keep an eye on it.
We'll see how it goes. Yeah.
John, for you, the government of Ontario has been very vocal in terms of their commitment. They've put $55 million to the Clean Tech Venture Capital Fund and recently $25 million to Scale Up Ventures. So what are the specific roles that the province plays vis-a-vis the overall federal initiatives being run out of Ottawa? How do you coordinate, and where do you see the synergies, and where do you make your own decisions and invest and figure that out?
Yeah, maybe I'll start off by saying, well, we were the first with the Ontario Venture Capital Fund, and that model was actually the one that actually constituted VCAP. So people like Lauren and Northleaf and others were, and so it's interesting that we're not following the feds, and most of the times we're leading. Like we have an SBIC, and they just announced one, and I won't go there. But I do think Ontario's taken a leadership role. I think the interesting thing for me now is what I'm calling OCGC 2.0, which is our investment agency. It's like the BDC for Ontario. What are we doing in the future of that? And we've done fund to funds and we've done directs on a co-investment basis. So I think the third leg of that stool is now fund investing to actually make sure that we can actually support the Ontario Venture Capital Fund community. Because one of the things I worry about is how long it's going to take Vicky to get up and running, and what are we doing in the market? So I think that we're doing a lot with Scale Up and Clean Tech and others, but I really think it's a natural progression to actually look at potentially getting into funds to back funds that are in Ontario.
Okay, one last question before we do sort of a general wrap-up question, and then we want to turn it over to the audience. The budget talked about strengthening Canada's IP regime, and a question for everyone at the table, whether from the investing side or the policy side. Has this been a problem for companies, the Canada's IP regime, and how important is it that we focus on fixing that to scale up Canadian companies?
So we actually hosted an IP roundtable, which was really a lot of smart, IP experts, and CG I didn't even realize it, is an expert in IP. And it is interesting with that, there was a lot of things around IP banks and things that we could do that other jurisdictions have done, actually buying university IP, et cetera. But the last session was around the role of accelerators and the role of the infrastructure community around raising awareness of the importance of IP protection and thinking earlier on in the company's development, that I think that companies focus on, getting to market as fast as they can and getting that reference customer and driving revenues and meeting those bottom lines. And then all of a sudden, we saw it in one of our company's Sidents, where they had one of those nuisance IP claims out of the US from a company called Kilopass, that they actually, it really hurt the company. And so I think that it's around how do we actually get our startups to think about intellectual property earlier, and how do we actually train people on what that might mean earlier on in that company's development. So, yeah.
And I think one of the challenges, because I agree with you, John, it's the money, right? And so it's fine to say to a young startup, hey, you've got to protect your IP. It's very expensive, and for a company that's trying to get to the next fundraising, and they know that they need to get the sales up, they need to get marketing. So that's also a huge challenge for these companies early in their lifespan.
Yeah, and flipping the same discussion on its ear, too often you can over-prioritize the IP, right? In a world where it, as I've said earlier, I don't think it's really about the tech. It's about market adoption. So, you can overemphasize the importance of it as well. And while you're busy building a balance sheet to protect your IP, right, as well, you need that as well. Your competitors are out eating your lunch in a slightly different way to the IP that you put so much stock in, right?
Yeah, I think the feds are also looking at it from the other side, from a policy perspective, about pulling IP out of universities and the ease with which it happens in some, and very difficult way it happens with others. McGill is is what I hear. I don't have any experience myself. A very difficult university, as an example, to get IP out of. Whereas obviously Waterloo and its IP process helped establish Waterloo for what it is now. So I think there's some talk around university, not withholding funding, but certainly encouraging universities to act more like a Waterloo than like a McGill on the federal scene, and how they can pull those levers to make that happen is something that I know that Minister Baines is quite interested in, and obviously there's a provincial jurisdiction issue, but that isn't the other side of the IP. It can be a problem, and that's why they gave, for instance, MyTax, which is it's an organization that's grown from nothing to quite a big size. Its job is to work with professors and universities to make their stuff commercial, like commercialization of this cool technology they keep developing. So they work with U of T and others. So they just got, I think, $200 million in the last budget to ramp this up. So it's the pulling out that also matters.
I mean, the other part of it is I'm amazed at how little our universities actually spend on their technology and technology protection. I heard a stat that U of T has only actually litigated one IP challenge in its life. Right, because they don't actually have the money to actually do that, right? And so I think that, whereas I think Stanford and others actually, might, I don't know, but, I think that it's around our universities actually need to spend more on recognizing that, yes, they're academic institutions, but yes, they're also centers for technology. And they need to actually make sure that we actually fund that up. We give universities enough money that they can actually fund technology protection. And so how do we do that?
We're going to wrap up before we take questions, and I'm just going to go right down the panel and ask each of you this. We've talked about a lot of different topics, from funding to talent to the ecosystem generally. In the next 12 months, to keep the pace at which the economy is growing here, the innovation economy, what do you see as the one or two key items that we have to keep getting right to keep moving this forward?
Well, I think
different perspectives, yeah.
I think from a timing perspective, I've been in this game for 30 years. Okay, so I'll never live through a period of change. I know it, that I lived through in the mid-90s when this thing called the internet became commercialized and the world became a very small place seemingly overnight. Not going to see that again. But I would argue that we're in the second most profound period of change that I will see in my business career, and it has to do with the amount of data that's being generated, the companies that are taking advantage of that good data to push commercialization efforts ahead, separating bad data that's not particularly useful from good. So I really think that the time we're in with connected devices, combined with the branding opportunity given what's going on in the U.S., combined with the early success that the outside funding has started to show, so that the completely different environment than 1999, where the the reward came with so much risk. I think this is our time in so many ways. So we need to keep going fast, right? Keep pushing the government to get that VCAP, the rules for VCAP 2 straight, tinker and get it straight, and then continue doing what we're doing, which is everything we're doing is correct, but speed is the key, because we're in a very fast-moving space right now.
Got it.
I think we are at a great point for the Canadian startup ecosystem. I think we're at a tipping point based on everything that's going on. I think the two most important factors that I would see that I think is key that we need to keep pushing the pedal on is the talent, particularly the sales and marketing talent, and making sure that we can scale our great technology and take that to market. And then the other thing would be the funding, and figuring out the funding and making sure that our companies have the funding that they need to grow.
From my perspective, we need to keep on following the market. This is about a market-based system, and this is about returns. Returns and strong companies are what's going to grow this ecosystem. So, I think we built a great foundation, but I think we need to keep going. I've heard people say, "Oh, we've solved the early stage problem." No, we haven't. Right? We haven't solved this at all. We just need to keep going. And to Mike's point, we're still a young industry. This is still early days. People have been at this like the Valley a lot longer. So I think we need to keep going. We need to build on the investments we made, like in AI and others. We need to figure those out. 5G, quantum, those things that we really need to build on. But I think we need to keep going and go hard.
Over the next 12 months, we need more Sean Spicer and United Airlines from a talent perspective. No, so watching those. What they said, I would add a couple other things. I would say that one thing for the health of the venture ecosystem, back to the title, we need more exits. We need more recycling of capital. We had 25 exits last year. It's off. It was not a great year for exits in 2015, and that had us concerned. There's 0 IPOs. 2017 looks good. Like the first, I see an exit every 3 weeks. 3 days. I feel like there's stuff ticking over. Real Matters just IPOing, backed by Wellington and things like that, right? Like you've got a track record of coming on. So we need those. We need more exits because we'll get more recycling of the funds, and the funds get returns, and then the returns beget investments, and you're off to the races. So just 3.2 billion invested is great. 25 exits, not so great. So let's get going.
So with that, we're going to open up the floor to questions if anybody has any. We've got a couple of mics around. There's one here.
Hi, I'm from Founder Institute. We're a pre-accelerator, so we sort of create the companies that go into the DMZ, Mars, etc. I want to pick up on John's point because I heard, as he did, the panel say, well, the early stage, there's lots of money, there's lots of things. And I wanted to challenge the panel, say, if you had, I've got 10 companies right now which need $100,000, $200,000, enough to pay for minimum wage salaries for a year. Where would you go for that? The angel groups, Maple Leaf Angels will do 1 to 2 deals a month. Where else are these small companies supposed to go for the funding? Where is all this money which is in that stage?
As far as Real Ventures did 66 deals last year, so no.
I would say I don't think that there is enough fund. When I say funding, I think we need it across the spectrum. And I think that was mentioned. It's not, and I think John said this, I think that there's danger in saying, hey, the early stage. Like our last one was, I think there's real danger in saying, hey, VCAP, focus on the early stage more, as Mike said, and so now we're going to focus on late stage. This is a pipeline, and we need to continue to fill the pipeline. You can't say, well, we filled the early stage, so now we're going to focus. Well, wait a second, where are the next ones coming along? So I agree. As an investor, unfortunately, I need to say no to a lot of great companies out there. And it's painful because I think, geez, these are great entrepreneurs. And so I think that we definitely do need more capital at every stage.
Hello?
Yeah.
Hi, Teresa Singh with IBM. To the point of the corporations, many of them have software offerings so that money can be used for talent. In case of IBM Global Entrepreneur Program, what else can the corporations do? They have incubation centers and all that.
Well, I think they can invest directly. In funds. The returns are starting to be irrefutable, right? In terms of the time, it's a rising tide. And I think that to the extent that entrepreneurs, fund managers are willing to invest the time to understand. I did a 7-city speaking tour for IBM a couple of years ago and got to know IBM pretty well in terms of what from a high perspective, what your challenges are from shifting from a seller of iron, right, to a service-based business. And I see all kinds of companies that could help IBM strategically in that journey. So am I motivated to disproportionately keep my eye open for opportunities that line up with IBM? No, I'm not, right? Cisco, they're a company that is I don't know where their next growth is going to come from. All I know is it's not going to come from within, right? They're going to be buying companies in order to innovate their way out of where they are right now. So I think one way that corporates could play more directly is to back people that have feet and ears on the street, that have taken the time to become familiar with your strategy, with your company, where to take ideas when we get them, where to take companies. The biggest challenge with large corporations when we get a company that's making hay is, where do I take it within IBM, right? It's such a complex organization. Developing closer ties with us, I think, would be a logical way to go.
If I could just add, I mean, I think the other part of this is, you know, we've seen the corporates like Rick Nathan and Rob Montgomery started CIX. That event was a little teeny tiny event, and now we're seeing more and more corporates at the table, which is wonderful. And that's a great part of our ecosystem we built. IBM invested in Watson, which is, you know, a wonderful investment up in Markham, et cetera. But I think we need the corporates to play in these platforms like quantum and AI and 5G and, you know, robotics or whatever these platforms are that we need to build, but do it in a non-proprietary matter. This isn't actually about IBM or Cisco or whatever. They need to play because we need a healthy ecosystem. They need to play because we don't know the interconnectedness between quantum and AI yet. It's there. You can't do AI without a quantum computer someday. We can't do encryption technologies without a quantum computer and AI. And figure
But
this
John,
out.
these are large multinational public companies, right? That have to make their quarter.
They do,
right?
But a little bit of their effort needs to be on how do we support the local ecosystem and actually figure out, because at some point they're going to benefit from them.
At some point, yeah. I mean, one of the downsides of the Dow, right, is that it doesn't allow you to look sometimes far enough ahead.
Right.
You know, and you know, that's a whole other discussion. But the challenge right before a lot of these large companies that have done so well over the years that are in danger of being disrupted is that they're not close enough to what's going on that could impact their business. And you know, question is, what can we do to do more? The question would be to get closer to the people that are closer, right?
Yeah. We're saying the same thing. They have huge balance sheets. We need them to get closer.
Just a timeline thing, right?
Yeah.
I think we have time for one more.
David Fong from ACTAC Group in Vancouver. We are angel investors, and I think one of the major barriers are university tech transfer offices. They are a disaster for Canada. They put up barriers which are completely unnecessary. They don't understand what they're talking about, and yet they want to become experts. When it comes to angel investing, what we really need to do is to get companies who are interested to have angel investment to understand simple marketing. I think the value of debt is a very necessary filter in order for money to be available for the successful ventures. So I think there may be a need for accelerators for pre-early stage investment so that angel investors can be more effective in supporting some of these great ideas without a market.
Do you mean marketing to the investors versus marketing to their business customers, right?
Well, helping the idea generators to understand how to approach angel investing,
Yeah.
and understand maybe they had a great idea, but there's no market for that. I think the second part is that in Canada, too often we look at just the Canadian market. For many of us, really, Canadian market is too small. If there's an idea that's any good, then we are looking for global market applications.
And I think that we shifted, 10 years ago, the only way to get something out of university was through the tech transfer office. And then we created things called campus-linked accelerators, which is a term we use, that created Ryerson, DMZ, Velocity. So these students are actually in second-year university, and they're going out with their own startup. Like they're not worrying about if the tech transfer office knows about it. They're out there with their own business. And I think that, if we're looking at a healthcare, IP, whatever, you go to the tech transfer office. But I think what we're seeing now is a whole generation of young entrepreneurs who are saying, I'm just going to go start a company in second year university, and I'm going to go and drive this model, right? They're going to fail, but they're actually going to bring ideas to market. And we've seen a huge growth in startups because of that, Velocity and Ryerson and others.
Well, I think that obviously by the interest of the questions and by the discussion, I think first and foremost, I'd like to thank our panel very much for a very enlightening conversation, and thank you very much for your insights and hopefully, and also your contributions to this. As we see, it is fast moving and there's lots happening, and hopefully the idea would be to check in again in 6 months to a year to see how we're progressing. As a little plug, we're talking about money and how to get money. One of the things Goodman's just published, and we've got copies outside and available on the web, is financial support for Canadian tech companies. It's not exhaustive, but it's a list of programs that are available in different areas for the government. You can get it online. We have a guide with appendices with full list of websites and click you right through. So it's a helpful starting point for a lot of companies who are at early stage looking for something. We also have our Goodman's Tech Startup Guide also available. Again, we'll send that around with the program, but it's available, some hard copies available outside. So thank you everyone for attending, and we hope to see you again soon. And thanks again, everybody.
Hey, Sean, that's fun.